Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
So hi guys, welcome back to another video. So for those of you who are new, welcome to the Greedy Trader channel, where I talk you guys everything to do with market profile. I know, of course, there are a lot of trading ideas out there, but we know that 95% of people in the institutional space, or traders, use market profile, and that's why we want to know everything we can know about market profile. Well, of course, for those of you who have been following the channel for a long time, then you know that this is just another video. Okay, so awesome stuff, guys. So today I'm going to dive straight into it. If you haven't seen my videos before, then just go back to the playlist and have a look at all the stuff that we've done. This channel has been running since 2014, whilst a lot of the videos we do now are almost exclusively focused on market profile. I do have a set structure with which I help traders in terms of how they can start to set up what I like to describe as their trading business, right? So what you need, tools, what you need to be looking at or paying attention to. So in other words, you might start off with, for example, developing structure, right? So understanding what's the macro cycle, determining the overall bias, and then move on to determine how you're going to trade this new information or this current information, deciding how you're going to manage risk against that, and then looking at this as a complete business, which is you cannot just rely on leverage assets. For example, I sell option premium as a more guaranteed form of income on a weekly basis, which allows me to relax a little bit more with my leverage trading, and also it allows me to trade a smaller, more reasonable size, which also minimizes my entire risk in the market. So I have an entire philosophy on how traders should trade in order to be successful for the long term. I think because of all the stuff that we see on social media, and also the emergence of things like prop firms, well, online prop firms, because prop firms have always existed, but just not in the form that they do. To some degree, yes, they have, but you know, I think now we're looking at a more brutal, more modern form of it, which is designed obviously in the same way the brokerages were designed, you know, and that's to ensure that traders overall they fail. And this is it in a nutshell. So, you know, and as a result, we've seen a lot of stuff now with, you know, people making 100 grand, Lamborghinis, and you know, it's not realistic. It's just not realistic, because again, you could get lucky. I'm not saying everyone with a Lamborghini who's a trader didn't acquire that by trading. What I am saying is that you can get lucky as a trader, but the vast majority of people don't get that lucky. So you could get lucky where, you know, you inherit something, I don't know, maybe you inherit $500,000. If you live in the UK, real estate prices are quite high. So a parent dies, you get a load of money, you know, you stick a third of it on black, and boom, it explodes. You got $500,000, and then, you know, you're pretty much running from there, right? You could be the worst trader in the world. You can go on to, you know, you could probably make a decent living at that point, right? So we're not really looking at those scenarios, because that's not the norm. You know, most reasonable people wouldn't put you know, a third of their a third of their inheritance on black, right? But then there are some people who would, because it's part of a business idea, because once they do that, then they have a business, and then they can tell traders that you can be millionaires, and they can take some of that money and go buy a Lamborghini. If you wanted to buy a Lamborghini, an Aventador, you know, it's not going to cost you. It's not going to cost you that much relative, you know, from a supercar point of view, which is why the Lamborghini Aventador is the most popular one that traders like to use, because it's pretty affordable now. And if you've managed to kind of, it becomes a business investment, right, or a business expense, because now you can get a lot of people who are chasing that kind of idea on Instagram chasing you. So anyway, I have digressed a little. I'm going to come back to the video, I promise. But I think it's important to kind of put that into perspective, that if you want to learn how to trade and be profitable over the long term, you really have to stop looking at those people, right? You know, not because they're probably don't, it's not because maybe the Lamborghini is theirs, but you have to think about the journey, right? What did they do? What did that look like? I mean, if they're younger people, their parents afford them that? Are they trust fund babies? You know, you don't want to be learning from people like this, because you just don't have the boxing gloves to box in the same ring that they're boxing. So it's always going to be largely an illusion that you are going to be able to be like them. So we just need to scrub that off the list. Anyway, guys, on back to the video as promised. So we're going to start off as always, you know, looking at some of the things that we spoke about. I mean, we did talk about this a couple of weeks ago. Just go back and review some of the other videos. We spoke about the Aussie rebound, and this was like 2 weeks ago. And this is the beauty about the profile. We can actually go back and have a look and see what exactly took place. And if you can see here, is that we punched in that low, right? So we spoke about liquidity concepts, right? So we punched in that low, rebounded, boom, break to the upside. And what did I say to you guys? That look, this was a good enough low. As soon as we re-enter value, we get a value trade here, and we got a gap in value. We need to fill that, right? It was a big swing, right? And I did say that here, is that there was a massive swing, and it was pretty much a trade and a half, and all we needed to do was prepare to execute on it. That's it. Now we have another massive gap in value, and we can expect that that gap's going to get filled. And this is some of the things that you can see in market profile that professional traders will never talk about. It just doesn't make sense to even discuss it. But I'm I'm putting everything on here, guys, so you guys can see what you need to be doing if this is going to work for you long term. So you need to build a structure around it. So again, we're trading into an offer stack now. We're bouncing a little bit. We can see there's value high here. You know, again, this has been the resistance for the past week. This value has largely been rejected on the Aussie dollar. So in my opinion, I don't think we're going to crack this yet. We're going to have to fill out these gaps. We've got a gap here. We've got a gap here. There's just too many inefficiencies in the market right now. And as a result, we can expect another aggressive downside swing, right? So basically, we anticipate some dollar strength, even if it's just on the currencies. It might not play into the S&P, but we are going to get some downside. Right, crude oil, again, gap in value. We are bullish on crude anyway. I mean, this has been really testy, right? So again, you know, it's been a tough one because we had this massive competitive buy. We know with the commodities we can get that. We've taken weeks to break, and with the politics, the geopolitics around oil, I won't be surprised if oil breaks lower. I mean, again, we formed a balance here, but with the gap in value, I can assume that at some point we're going to trade a little higher. But we can start to make a reasonable assumption now that this is a long-term macro cycle that may end up being quite bearish, right? So again, we might push in more lows. I think really this is the preparation for oil to be much cheaper in the future. It just doesn't make sense when we think about the future direction of energy. Oil can't be $60-70 a barrel, and now with the geopolitics in Russia, I'm not expecting that will happen. But I always said this, I've been structurally bullish on oil because of the way we're positioned. However, that view is waning. I can see depressing value. Again, at one point I had a long position which I had to cut. You guys saw me do that. We had some good upside swings, and then we had to get out of that trade. It just didn't look like something that we wanted to hold, and the profile gave me that intuition that we were just not playing nice at those levels. So you can actually see where you want to get out of your trades when that trade isn't working without you necessarily committing to your stop. The S&P 500, bullish on this, structurally bullish. Again, when we think about these profiles, we are looking at weekly profiles here. So it makes a lot of sense when you see this kind of setup. Again, if we go back to historically when we're talking about this, we saw the competitive buying here. At that time, we were long here. We traded to the upside, cut that trade, and we've continued going. And there was a general sense that we were going to go higher. But obviously the way we trade and the style we trade is we want to take money off the table as much as we can because we want to ensure that we're banking, right? We see good plays. We don't want to waste too much time in the market because things can easily change, right? So we can see here, massive gap in value. We have had a strong bid up running into the US session. as we always know with the S&P and the US indices, we could break lower. Like we could just literally cut down for the week. When we look at some of the options and we see what's going on in the options chain, we can definitely see there's potential for that to happen. So again, for the S&P, I'm structurally bullish, but at this point we're like really overextended. We are kind of where we're at the target that I was suggesting, 4,300 on the index. That was my commitment from when we were trading at 4,000 on the index, is that we're going to get an upside break, right? Of course, we know the reasons for that. We discussed that in prior videos. So it's definitely a bullish framework. And when we think about the longer term macro, we're definitely bullish on the S&P. That goes without question, guys. We are bullish on the S&P. We think that the S&P is going to be on fire, right? I don't know, maybe I'm going to argue that it's because the American economy is so great, because it ain't, but it's the largest economy in the world, and the S&P is going to be on fire. Gold, we've been rejecting it in this value. I'm structurally bullish on gold anyway. I do think we're going to get some more upside swings, and we can see that here. Relatively, like most of the commodities, we've stayed flat. What my thesis was is that if we do break down and get value acceptance under 1938, then we're going to go to 1900, and we're going to have to take out this gap at some point. This is a major gap, major inefficiency, and you can see historically we do take them out. So 1800 an ounce gold is definitely on the cards for the future. So we're going to see lower gold prices. Again, with assets like Bitcoin coming into their full cycle, I mean, it's just a much better asset to invest in than gold, right? It's just a much better asset to invest in. The economics of Bitcoin just makes more sense, right? So if you think about the gold supply and you think about the Bitcoin supply, and then you think about how that all comes together, stock to flow ratios, etc., you know it's Bitcoin, right? Bitcoin is where you want to be. And you know, you can't really get sucked up on all the FUD and all the politics and all of that stuff. You know, if you want to be an investor, you can't really look at that. So for me, Bitcoin is where it's at. Cable, again, same theory with the rest of the non-dollar assets. So again, you can see gap in value. We've filled that now. Obviously, we have an offer stack here. Wide initial balance, so we'll see. Normally, we tend to get failures from this. I'm not anticipating that we break too much beyond value high of a couple of weeks ago. Dollar yen, again, structurally bullish on the dollar versus the yen, and that's because of the monetary policy in Japan anyway. And structurally, again, I do have a course, guys, that I'm going to be putting out on market profile. I've got the major options course, so I'll just leave links in the description below, so check it out, which will literally tell you guys how to sell premium week to week and actually make money from this stuff. So I believe the links in the description below. If you join my Discord server, you'll see that I have so many other programs. I produced a massive suite of courses on Udemy as well, which was really good for beginners and people trying to come into this. And you know, students have been like super stoked about that. You know, I did it at the time. It was just like a little pet project that I wanted to do, and it just turned out to be something else. So it's worth checking out for sure. Again, I'll be doing something more structured because I realized that, well, you know, I need to do something a little bit more structured that people are really going to be able to see the ins and outs of. And I will be doing that. So that's going to be there where I will show you how to determine structure, right? So you can kind of develop a very good bias. But again, if you look at dollar yen, we can see though there's a gap in value. So again, we can expect at some point the dollar is going to get whacked. Dollar CAD, again, this has been a major support for weeks. We're now trading on it. I'm of the opinion that I'm structurally bearish dollar CAD. This was the offer stack here. We spoke about that. You know, we played all the inefficiencies. We've got a massive gap in value here. So we need to take that out first. Right? So even if we go lower, just keep an eye on the gap in value. So when you get that big swing, right, that's what you want to aim for. So again, we are anticipating that, you know, stuff's going to go a little bit haywire the next couple of weeks, right? Again, equally Bitcoin, we spoke about this. I like it lower. Again, remember guys, we're coming close to a halving, right? It's 26k for a Bitcoin, right? I believe that we can retest the 24k mark, which is where I'm kind of looking. If we can get back down to these sort of lows, then it will be Christmas. We can literally see the offer stacking. So really and truly, like always, if we start to recover 27k, which will be a shift in value, then there's not much holding us back. The seller NG period is rather late, so this will be a blow off, and then we're going to start making a very big move to the upside, probably 50k Bitcoin before we get the sort of late Usually we would have gotten the late summer dip now, so really sort of June, July is where you get that big spike up in the Bitcoin cycle. So I am expecting that, to be honest. So it's not a bad place to be dollar cost averaging, for example, if you are trying to ultimately play and get into Bitcoin. But again, these are really good prices based on where we are in the cycle. It can be a little bit inconceivable to think that we're going to get much lower prices, but the politics on Bitcoin is pretty steep. So we'll see, maybe some SEC news or something, and then the whole thing tanks, but it will still be a buying opportunity because Bitcoin ain't going anywhere. We can just write that off right now. Sterling yen, structurally bullish. Said this time and time again. I still maintain that thesis. In fact, for me, this was the asset that was going to outperform this year, right? So as you can see what's happened, sterling yen, it's been a massive move for weeks on end. I think we're going much, much higher. I will be rechecking my structure against this week for some targets, and we can talk about that in future videos. The Kiwi has been a bit light for me. It was one of the ones that I didn't highly recommend, but you can see we're heading into that minus development now. So if we're going to get a reaction from there, I'm structurally bearish on the Kiwi anyway. So I think it's not performing as well as its neighbor, but we'll see. All right, so awesome. So that's the week rundown. So we've looked at the big, slightly, what's the word, macro market profile picture. So we've seen that. Now let's talk about some of the trades that we look at on the intra-week basis, right? So how we trade week to week so we can keep that income flowing, right? So we need some really good ideas to trade so that we can trade with minimal risk, but also balance our portfolio as we do. So let's start with dollar yen, right? And I'm going to talk about some really key things that we tend to look at with these kind of assets. So again, right, the really simple concept here, we just go through it. So generally speaking, when we look at a profile chart, we are looking at value high and value low. We're looking at the open, the close, the initial balance, point of control, and the rest is understanding bid and offer stacking. Pretty much it in a nutshell, right? So if we can start to understand and tie these concepts together, then we got a devastating trading system. So one of the things that we want to look at is trade location, as always. So as you can see, this market walked its way up. We were really high relative to trade location, so you expect some kind of a pullback always. So you can see that push lower, and one of the things we saw is we pushed up, we start to see some bid stacking, we go up, we hit an offer stack, we pull back, we close lower, we go up, we fail to do a new high, we start to break lower. That becomes a structural short. What are you looking for? We got competitive buying here, so if we start to trade into this region, you need to cut that trade. So technically speaking, that becomes a 264 tick trade, right? So that's kind of how we want to assess it all the time. So if you look at that, pulling us down there, that's kind of it. And then we look to cut that trade, right? Get out as soon as possible, right? So again, and these, by the way, these are 4-hour profiles, right? So this is a more condensed or more internal view, right? Some of the cool things we can do with market profile is segment the distribution, right? So you can see we 4 hours segmented it. So again, so that would have been a good trade. And then you can see the recovery. So we do trade a little lower, we recover, boom, we hold some sell pressure, gap in value, right? So immediately we know we have a bullish bias developing, bid stacking, offer stacking. We start to trade up. Like if you're a market profile trader, you might jump in to narrow your risk at this point. If you want to leave it late for a quick scalp, as we pull up, you can see we engulf the prices, take out the highs, right, where all the bids were stacking, and then we start running into offers, right? Usually the offers don't hold up because we have to think about things like range, for example. So again, you can see that break here, boom, where we target in, we just need to get to the highs, right? That's it. Quick slip, boom, trade's done and dusted, right? So again, some of the way we looked at it, P&L on the screen, guys. So this is how we looked at it with some of our trades. Now, a lot of the trades we did was on the 9th of June, and that was in, so the cable trade you can pretty much ignore. That wasn't really an intentional trade, I might add. So that was just something. But again, the Aussie dollar trade is what I want to draw you guys' attention to, which was the trade that we looked at on the 9th of June. So if we just backtrack up, and we can see these opportunities everywhere. So again, you can see that 9th of June, we started to push lower. You can see that all that offer stacking, right? Market struggling, close, small end period print, competitive buyer trying to get involved, and then late to the party, boom, crack down, right? Most people will chase, right? Big break, oh, I'm getting short. There was no short opportunity. Lower lows, it wasn't there. Based on what we look for, it wasn't there. But we still break down, touch out the low of the period here, get some support, and then start. Now this is the opportunity, guys. So you can see us break back, gap in value initially, C period takes it out, we break back, and then again a market profile trader sees a value trade straight away, and then you get long. Now with that risk, what you're looking for, break of the highs, guys, because this is a high, and if you look at structure, it's a break of a high, right? So that's what we're looking for. So again, as we pull up, you get long, you want to cover, get out of there as soon as possible. We don't know if this thing's gonna go. We can look at the structure and determine we're gonna go higher, but we don't want to get into the habit of, you know, staying on the table longer than we need to, right? So again, that's some of the nuances that come with that. So obviously our trades reflect that. So where we are today now, we can already see what kind of opportunity. There's no trade at the moment, right? We're building here. We're probably going to maybe even keep breaking higher structurally. It's higher highs, higher lows. I mean, there's really nothing. There's no information here that makes us want to trade. We opened inside value. We're probably going to break down, maybe test the lows, maybe get volatile, you know, whatever. But we're kind of stuck here. What we really need to see is some structure developing, get into the upside, higher highs, break down, and then we start to see the loads getting taken out. That's when we want to take action. There's a lot of patience, right? There's a lot of ultimately sitting on your hands, waiting for things to kind of set up the way you'd like to see them before you try and jump in and start to play. So again, we see a similar thing with the S&P. I am usually a little bit more bullish bias on indices just because of the nature of it. So usually setups like this, for example, where we're touching out the lows, we're building here. Let's see how the next couple of 4-hour blocks set up. But again, if we start to take out the highs, then I would assume we're going to probably get long. So again, we just have to be mindful of offer stack, pulling lower, testing value lows. Trade locations are pretty good for professionals at that point, even if we're in an extending market, and then you want to start to play off that to kind of get that confirmation that the offers are not going to hold up anymore. So awesome stuff, guys. This video is a little bit longer than I would normally like, but again, I hope you enjoyed it. Hit the like button, subscribe. Let's tell the world what we're doing here, right? So we can really grow this channel. It's really tough these days if you're trying to produce content for YouTube, get more people interested in your topic or your subject. It's just nuts, really. Don't even know why I do it. But going forward, guys, just smash the like button, subscribe, let other people know what's going on here. We try and make trading real with this channel. We don't want to be talking about Lamborghinis and, you know, trades that are practically impossible to do or keep consistency with. We're looking at ideas, concepts that we know professionals use day to day to achieve the returns that they need to achieve, and with lots of good practice and good concepts. And that's kind of what we do here at this channel. Well, awesome stuff, guys. Till the next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?